Video 10, Support and Resistance, Part 2. As mentioned in our previous video, support and resistance are zones within financial markets where price could reverse. In our previous video, I taught about horizontal support and resistance and gave some examples on real-life price charts of horizontal support and resistance. In this video, I will teach about dynamic support and resistance, which personally is one of my favourite support and resistance concepts and is the type of support and resistance which I use in my own personal trading. I used this illustration in the previous video to demonstrate resistance becoming support or support becoming resistance when support and resistance is broken. With dynamic support and resistance, the concept is the same. When a dynamic support is broken, it can become a dynamic resistance. When a dynamic resistance is broken, it can become a dynamic support. So what is dynamic support and resistance? Unlike horizontal support and resistance, which is a horizontal line across a chart, dynamic support and resistance is created by moving averages. If you're brand new to moving averages, I would suggest that you pause this video and go and watch video number 13, then come back to this video, as I will teach you about moving averages in that video. The illustration on this slide has a moving average. Each time price reaches this moving average, it is rejected. We have a dynamic support created by this moving average. If price was below the moving average could act as a dynamic resistance. And as always, I'll give you some real life examples of this on price charts. This is a daily chart of the Euro US dollar, and on this chart I'm going to show you the power of dynamic support and resistance. The most popular moving averages for dynamic support and resistance are 21, 50, 100 and 200. Let's bring up a 100 moving average. On the chart we have a 100 moving average, and you should notice very quickly that when price reaches this moving average, price is rejected. This moving average is acting as a support, which we refer to as a dynamic support. Price pushes on the upside, it pulls back, reaches the moving average and is rejected. Price pulls back again, reaches the moving average and is rejected. So why does this work? Why does having a moving average reject price? It's purely self-fulfilling. Many professional traders use moving averages for dynamic support and resistance, that it is self-fulfilling. People are buying at these levels, which pushes price up. Let's look at an hourly chart of the Euro US dollar. This is a 1 hour chart of the Euro US dollar, and I have a moving average set at the period of 50. Price moves on the downside and reaches the moving average area, and price is rejected and goes on the upside. The moving average is acting as a dynamic support. When price comes down a second time, we have this big pin bar, and buyers try to reject price. It comes up here, but unfortunately they fail and the dynamic support is broken. What's interesting is our dynamic support now becomes a dynamic resistance, just like our horizontal support and resistance, where ceilings become floors and floors become ceilings. Our dynamic support and resistance works by the same concept. the dynamic support is broken, price comes up and tests the new support term resistance, price is rejected and moves on the downside. Once again, the moving average is broken. The resistance has now once again become a support. And when price comes back to this support level, it is rejected. Price reverses. Our moving average is acting as a dynamic support. Now, how can we trade dynamic support and resistance? In our previous video, I mentioned that pin bars and engulfing candles are great signals to trade areas of support and resistance. You'll notice that we have an engulfing candle here. If we went short, we could have profited as price went on the downside. When our moving average is acting as a dynamic support, we have a pin bar here, an engulfing candle, and other signals we could have taken to go long, and price then went on the upside. In summary, dynamic support and resistance is created by moving averages. The most popular moving averages for dynamic support and resistance are moving averages set at the period of 21, 50, 100 and 200. Our next video is support and resistance part 3. As always, thank you for watching this video. Please watch more and please check out our website forexminute.com.